Hello and welcome to Blytheway Business News. I am Bonnie Hughes. Our guest today is Caledonia Mining. They've been on the show before. They came out with their financial results today. Their share price has increased about 7.5% since August, which is about the same increase in their quarterly production over Q2. And here to tell us all about the results is Mark Learmonth, Chief Financial Officer. Hello, Mark, and thank you very much for joining us.
Hello.
Well, as always, you're consistent in paying your dividend, basically consistent in generating a profit and continuing with your production. So do you want to give us some highlights about this results?
Yeah, the the results for the third quarter really hide the fact that actually that third quarter basically splits into two halves. The first half was terrible. Largely because of the electricity situation in Zimbabwe. So when we published our Q2 results, we always in the MD&A we always put in the production numbers for the trailing months. Okay, so for the quarter to the end of June, we actually disclosed production for July, and in July we produced less than 4,000 ounces. You know, so we can all do the maths. That's less than 48,000 ounces a year. That's not great for us, and that's because in July, as I said previously, July and the first week and a half of August, we were suffering enormous power outages. And we ran the gensets in those 6 weeks more than we did for the whole of 2018, all right? So that really wasn't a great foundation to produce gold. Since then, since like the middle of July, the electricity situation has stabilised, and we have to give credit to the Zimbabwe government for moving very quickly with the industry to come up with a pragmatic and workable and a good outcome. So that's worked very nicely for us. And also with some of the internal measures that we've been taking to improve worker morale, reduce the amount of mining dilution, they've now begun to bear fruit. And so August was kind of so-so, September was marvellous, and then into October, and certainly up to November now, things have been going really very well indeed. So production for the quarter was pretty much the same as previous quarters. It was like 13,000 ounces, 14,000 ounces. If you look at October we produced like nearly 5,500 ounces, I think 5,600 ounces, which is a run rate of well over 60,000 ounces a year. And at that level, we make great money. So all of a sudden, things seem to have sort of come right, but that's not really evident if you just look at the numbers, because they as I say, it's like two halves of a.
And with regard to the electricity situation, what are the chances that you will have more power outages, or has that been taken care of?
No, it's not been completely taken care of. So what Zimbabwe's done is that we now pay in US dollars, which allows Zimbabwe to import power. And so we get dedicated power that's imported. We pay for it in foreign currency, but they're importing it from South Africa. And as we all know, the electricity supply situation in South Africa is pretty shaky. And the first thing that happens when South Africa runs into its own power generation problems is they stop exporting. So it buys us a sort of a breathing space. But we've got no choice. We absolutely have to press on with the evaluation of a solar project. We're making good progress on that. We've just finished a tendering exercise to identify up to 5 shortlisted parties who are well credentialed and have got the right sort of competencies, and we'll then be asking those parties to come up with detailed quotes to build the solar farm, and if necessary also operate it, and let's see if someone can finance it more cheaply than we can finance it ourselves. So we're hoping to award that contract by the end of February next year, and then absolutely go to it and get this thing built and get it running, because you know this problem's not gone away. This electricity problem's just been postponed for a bit, and it's beholden upon us to find a solution. What we've also done is we've put in the final 6 megawatts of additional genset capacity, so we now completely independent, if needs be, from the grid. But you know that means we potentially would be using 1 litre of fuel every second, you know, which is expensive, yes. and there's a supply issue. So we've done the best we can to ring fence ourselves, but we've got to get this solar thing in.
Now, in the first half of the year, you had a hedging contract for 5 months in order to help fund the cost of completing the shaft, which is now done. So, is there no more hedging contracts on?
No, we're still in the process. We've stopped sinking the shaft,
Yes.
but we're still equipping the shaft. So we're still spending $20 million. Next year, we'll still spend $20 million. And so after the end of the quarter, in fact, actually in the last couple of days, we have put in more hedging arrangements to protect us through the first 6 months of next year. So we've locked in a price of $1,400. But once we get through that, the capex profile, the capex profile next year is very much front-ended. Once you get to the middle of next year, the capex should begin to diminish somewhat, and so we're less exposed at the back end of next year and the front end. So yeah, so that we put that in the MD&A, which we published yesterday. But that doesn't affect Q3's results. That's post Q3.
Yes, absolutely. And eventually, after you have these capex expenses all off, that's when you're expecting to start making some very good profits.
Yes. Yeah, well, we're making great profits now, but we'll make slightly higher profits because the production will go up and our costs will come down a bit. But the critical thing is our cash generation. So it's the cash generation will improve enormously because we will no longer be spending $20 million on this central shaft. That will fall away quite quickly to about $5 million. And so the delta between the cash that we earn and the cash we're spending goes up enormously.
And is there a possibility that once you're generating more cash that you may look at increasing the dividend as well?
Of course, yeah.
Well, investors certainly like that in this market. Yeah. And so what's the plan for what do your plans are for moving forward?
Well, next year is going to be, so 2020 will probably be very similar to this year. Production perhaps slightly higher than we're going to achieve this year. So this year we're saying 50 to 53. Might well be at the top end of that, might just be a little bit over. Next year perhaps 55, 56, so pretty much production will be the same. Costs about the same. Gold price seems sort of set to be slightly higher. But next year, 2020, will pretty much be the same as this year. And then by the time we get to this point next year, the end of 2020, that's when the central shaft should be finished, and we should then be well on our way to increasing production very significantly in the following year. So we're now in well within the last year of this five-year project.
I noticed also in the quarter that foreign exchange gains and losses had a very big contribution to the results. It looked a little bit confusing.
It is. It's been from just preparing the accounts, it's made life very, very difficult. The Zimbabwe dollar has collapsed from 1 to 1 at the beginning of this year. It's now 16 to 1. And so that means that all of the Zimbabwe dollar liabilities are now effectively been devalued to not very much at all. So particularly the term loan, a $6 million term loan, that's now less than $500,000. And more significantly, we had a huge deferred tax liability, which effectively arises because we were investing huge amounts of money. That gives rise to a lower income tax charge in the year in which you spend the money. But it's a loan from the Zimbabwe government to us. That was $23 million. I think it's now carried at about $3 million. The problem is they're unrealized. So that's not money in the bank yet. They will be realized in due course. And so they give rise to very, very substantial foreign exchange profits for IFRS accounting purposes. But I'd find it very difficult to sit in front of you and say, oh, no, we've really made $2 a share from unrealized gains. So we reverse those unrealized gains out for the purposes of adjusted earnings, but they will, if the Zimbabwe dollar stays where it is at the moment, they will in due course become real.
And when you get your revenue in US dollars, because that's how you sell gold is in US dollars, you don't actually convert it into Zimbabwe dollars.
We get our revenue, 55% comes in US dollars, 45% in local currency. We use the local currency for local expenditure, and if anything, we're short local currency and we're long dollars, which is the best way to be. But actually, one of the critical things is, since about this time last year, since about October, November last year, the monetary and fiscal environment in Zimbabwe has been very, very turbulent. In the last month, 6 weeks or so, it's now settled down, and we're very hopeful that no one interferes with it, because actually, as it stands right now, it's a much more stable platform for us to work in.
And how did they come to the conclusion that they should make it a more stable environment? Is that to attract investment?
It's just settled down.
It's just settled down.
People have stopped tinkering. and they've stopped changing the rules, and it's settled down, and it's now very workable, and long may that continue.
Yes, definitely. You survived very well in a very tumultuous environment, that's for sure. Caledonia has been definitely consistent in their earnings and their production throughout the years of turbulence.
Well, talking to the operational people, this year has probably been the hardest year we've had for the last 5 or 6 years. It really has been very difficult, and we now come through that. And so with a high gold price, production has stabilised, and the rules that we operate within Zimbabwe have now sort of firmed up a bit, and just makes the whole thing seems to be coming together.
So operations are addressing the fact that sometimes you have grade variability, sometimes it's lower grade than other quarters.
The grade now seems to have improved. We've put in place various measures to reduce mining dilution, and they now appear to be bearing fruit. And so we've seen, certainly in October and in November to date, a significant improvement in our grade, and we hope that will continue.
And once you achieve your 80,000 ounces production, what's your long-term next strategy?
Oh, well, we've said this for quite some time. We've been looking at many new opportunities in Zimbabwe. We've narrowed it down to 2 or 3, which really are very, very attractive. All relatively small, all brownfield. So we're not buying a big hairy operation which needs fixing. They will all. Some of them may or may not have a modest resource base at the moment, but with a bit of exploration, we think they could potentially be very, very attractive assets. So the idea would be, hopefully, in the next sort of 6 months or so, to get our hands on one or more of those assets, and then begin to redeploy some but not all of the cash that comes out of Blanket into proving up resources and hopefully building a much bigger mining operation. In our minds, in the next 5 to 10 years, we can see as anything between 250 and 500,000 ounces coming out of a purely Zim-focused business with some really quite significant mining operations.
And if there's an improvement in the gold price by then, well, then that would be very great.
We don't look. Obviously, everyone likes a high gold price, but we don't need gold at 1,500 to make these work. We're building a business that is going to be very low cost, and we'll run along quite happily, making good money at a gold price of well below $1,200. We don't need a high gold price.
Because what was your all-in sustaining cost for this
quarter?
Well,
the all-in sustaining cost at the moment is below $900, but that will come down to, we think, in the low 700s as we achieve the 80,000 ounces a year. Our fixed cost base is very high. The marginal cost of each ounce of gold is very, very small. So as you increase production, those fixed costs get spread over more ounces, and it brings the cost down very significantly. And in addition, don't forget, the central shaft will be a much more efficient operation. Our workers will go from surface down to their working areas within half an hour or so, instead of having to walk 2 hours to their working place and back again. So it will become much more efficient.
Well, Mark, thank you very much for joining us. I look forward to speaking with you again very soon.
Thank you.
And thank you very much for joining us on Blytheway Business News. Have a very profitable day.